Okay, so good morning, everybody. You're welcome to day 2 of the Trading Pros beginners class. This class is structured by Trading Pro Nigeria to enable its prospective clients become well versed with the understanding of the market so that you'll be able to interpret what you see and also take and make profitable trades from the interpretation. As you all know, Trading Pro is an international multi-award financial service provider. We have offices in several countries and currently also expanding. So with that out of the way, let's get down to what we have for today. So who was in the class yesterday? Anybody here? Anybody here? Anybody in the class yesterday? Hello? Anybody in the
Yes,
class?
I was in the class yesterday.
Okay, who else again? Who else again? Okay. So today we're going to continue from where we stopped. We stopped at PEEP. So I hope everybody understands what PEEP means. Hello?
Yes, it's quite clear.
Yo,
Mr. Samuel, I hope you understand
yeah,
what...
I understand what. Yeah, I understand what peace is.
Okay. So since you understand what PEEP means, so we're going to move forward because your understanding of what the PEEP is going to help you calculate trades when you start taking trades. So if they tell you a 20 pip stop loss and a 20 pip take profit, you understand what is being said and what is expected of you. So next thing we're going to go to is the spread. So the spread, the difference between the bid price is popularly known as the spread. On the Euro USD quote above, the bid price is 1.3456, 1.3456, and the ask price is 1.3458. So look at how this, so if you want to sell Euro USD, you click sell, and if you want to, and you will sell at 1.3456. If you want to buy Euro, you click buy, and you will buy at 1.3458. So let's look at other examples. So let me go to the platform and give you a physical example of it. So when you come to the MT4 platform, that's when you finally start to use it. If you look at the chart, you have Coleman. Okay, it's putting up. Okay, so if you look at this, can we all see these icons blinking red and blue at the top left corner? Can we all see it?
Yes.
Okay, so if this is where you take a buy, a sell, if you want to sell, and if you want to buy. And if you notice on the Trading Pro, there's almost no difference between the two prices. There's almost no difference between the two prices because Trading Pro offers spread-free and swap-free services on their accounts. Are we all together? So Trading Pro offers spread-free because if you notice, there's almost no difference. You ignore this last digit, it's called pipette. So you see the sell and the buy are almost the same price. The difference is just like, it's negligible. So that's one of the benefits of using Trading Pro. You don't have that spread and swap on some of our accounts, like the rookie accounts and the Scalpex accounts. We don't have spread on them. So you don't have to worry about spread when you start trading with us. So the next point we're going to move about is the candles, the candlestick patterns. So somebody will say, what are the candlestick patterns? Candlestick patterns are how you interpret what the market is telling you. Some people will call it graph, but by the time you're through with this class, you won't be calling it graph. So let me give you an example. So when you open your chart, all these are what you call the candlesticks. It's a graphical representation of the market and the market's actions and intentions. Are we all on the same page? So
Yes, sir.
some people that will call it graph, please, it's not graph. It's disrespectful. It's not graph. It's called candlestick. And by the time you're through with this class, you'll be able to interpret what it's telling you, because the problem comes in when you can't interpret. It's like communication. The language is like the candles is like the language of the market. So if you can't interpret what the market is telling you, there's going to be a breach in communication, and most often that results in some very painful experiences. So let's move forward. So we're going to look at some candlestick patterns. So the terminology, Japanese candlestick. So why it's called Japanese candlestick is that it's originated in Japan. They originated from Japan, and they were used way back in the 18th century as a way of buying and selling rice. So that's where they started it from. So back in the day when Godzilla was looking, the Japanese created this old school version of technical analysis to trade rice. That's right, rice. A Westerner by the name Steve Nissen discovered this secret technique called Japanese candlestick, learning it from a fellow Japanese broker. Steve researched, studied, lived, breathed 8 candlesticks, and began to write about it. Slowly, this secret technique grew in popularity in the 90s. To make a long story short, without Steve Nissen, candlesticks chart might have remained a buried secret. So Mr. Steve Nissen made it possible for us to have this. So somebody will say, what was the Western market using before Japanese candlesticks? The Western market, they were using what you call bar charts. Hello, are you all still with me?
Yes, sir.
So now, looking at this now, if you ask me, if you tell me this is a graph, I'll tell you this is a graph. So you can see this does not have that solid a pictorial representation of the market's actions. So this was what the West was using before the advent of candlesticks. So can you see the difference now? This has a clearer image and communication level than the bar chart. So the West were using bar charts before Steve Nissen brought in what the Japanese were using, which is the candlesticks. So now let's continue. So the Japanese candlesticks are a way of presenting the price action over a set period of time. They provide useful information such as the market sentiment or possible reversals in the market by showing the price movement in a specific way. A Japanese candlestick chart shows you more information. When you trade something, whether it is forex, stocks, or commodities, you will use price charts to see the price movements in the market. So this is basically what a candlestick is. So when you have, depending on the color, but the parameters are always the same. You have the top wick, you have the body, and you have the lower wick. So this at the top is called the wick. So that at the bottom is called the low, and the wick at the top is called the high. Then you have what you call the open price. If price opens down and closes up, it becomes a bullish candle, or what you call an up close candle, because you might say green, but you might be looking at somebody else's chart and it is not green. It has a different color, and that might create a bit of confusion. So I always use the term up close and down close candle, because the close price is very important. So if the price opens at the top and closes at the bottom, you have a bearish candle. which is also referred to as a down close candle. So there are lots of different chart techniques. All these help you interpret what you see in the market. So you have what you call a piercing pattern. So a piercing pattern is when you have a down close candle and an up close candle that closes more than halfway into the body of the previous down close candle. So this is what you call a bullish piercing pattern. When you see this pattern at a support level, most often than not, you're looking at a move in the opposite direction. So that means if price has been coming down and you see this piercing pattern, what it means is that price will be moving in the opposite direction. The other pattern is what you call a dark cloud cover. It's the bearish version of the piercing pattern. So what is a dark cloud cover? When you have a up close candle, because you can see where the candle closes determines if it is bullish or bearish. So in this case, it's an up close candle and it is green, so it is bullish. So an up close candle, then you have a down close candle that closes below half the range of the preceding candle. So when you see this at a high, this signals to you that you might be looking at a bearish reversal. That means that price might not continue up, price might continue in the opposite direction. Then the other pattern, I hope you people are taking notes.
Yes, sir.
Then the other pattern is what you call a bullish engulfing. Let's see if we can find a piercing and dark cloud cover on the chart so that it will be easy for you to understand. Because by just looking at the chart, you'll be able to see it. Now, I'm coming. Because it's not something, these are charts I didn't see that I have done any prior analysis on. So let me see.
So I can see one from the S-string.
This one here, Nabi.
No, the up one.
Yeah.
The bearish candle. No, the bearish candle before the second.
Is it here?
No, take the cursor down small.
Yeah.
No, down.
Yeah.
No, down.
Yeah.
The next swing. No, up. The next upswing.
Yeah. Or
No.
here. Here.
Yes. Yeah.
This
Is
is
it
a
not bullish?
this is a bearish engulfing.
Bearish engulfing. Okay.
Yes.
Okay.
This is a bearish engulfing. This is a bearish engulfing. That's good. The bearish engulfings are easier to see. I'm trying to find the dark cloud and the bullish, the dark cloud cover. Yes. Do you see these two candles here? Do you see these two
Yes,
candles?
sir.
This is what you call
Yeah.
a dark cloud cover. And do you see immediately after it from what happened? There was a down move. Do you see it? Now, let me see. So what you can do is, as you know this, you go to your chart and see if you can find them. Let me see if I can find a bullish PSM pattern. Let me see if I can find a bullish PSM pattern. See if I can find a bullish PSM pattern. See if I can find these two candles. Can you see these two candles here? This down close candle and this up close candle. Can you see it?
Yes, sir. Yes, sir.
Now you see that this up close candle, it's because if I move this forward or if I try to enlarge this, I might miss this area now because it took a while to get this. Okay, so let me zoom in so that you guys can see it clearly. Now, if you look at it, I'm coming. So if you look at this candle now, this up close candle and this down close candle, if you notice, the down close candle, the up close candle closed more than half into the body of the previous candle. Can you see it?
Yes.
Now, this is what you call a bullish piercing pattern. And after that, what do you see in price? You see the way price rallies. Do you get it?
Yes, sir.
Okay, so Mr. Ola, are you there? Mr. Folabi. Mr. Folabi, are you still with us? Okay. So there's what you call a bearish harami. You have a bullish harami. You have a harami cross. You have a morning star, and you have an evening star. So the next one we have is the morning star and the evening star. So we're going to find this now on the chart. These are relatively easy to find. So when you have a morning star at the top of a range, what it means is that most often than not, price is going to move in the opposite direction. So if you notice, these are 3 candle patterns. It's not 2. These other ones are 2 candle patterns. This is a 3 candle pattern. So let's look for it. Morning star and evening star. Let's see, we'll find it. Let me go to another instrument. Let me go to gold. Because sometimes some patterns are not easy to see on an instrument, and on other instruments, they are very easy to see. So that's what you need to understand. So this is a variation of the evening star formation. Do you see it? There are variations, because if you look at this chart now, because I'm going to spend a little bit of time explaining this now. You see, the morning star formation is a bullish formation, and the evening star formation is a bearish formation. So you have a bullish from 2 bullish candles and 1 big bearish candles that almost covers the body of the 2 preceding candles. The morning star, the evening star formation. The morning star formation is a 3 candle pattern where you have 2 down close candles and 1 bullish candle that covers almost the body, the entire range of the 2 preceding candles. So when you understand that, if you go to your chart, this is that same formation with experience. This is the textbook. Can you see the textbook? Sometimes it appears like this. Sometimes you will not have 2 bullish candles. You're going to have 2 bearish candles. Are we on the same page? Now, this is the textbook.
Yes, sir.
For the textbook, what you read, this is a textbook variation of the evening star formation. Do you see it? After it formed, do you see what price did? Price went down. Now, let's see if I can find another one. See if I can find another one. This is another variation of it. These 3 candle patterns, another variation of it. And this is
Of bullish.
bearish. It's bearish. Bearish is
Okay.
evening star. Bullish is morning star. Now, this is textbook
Okay.
formation of it. Can you see it? 2 down close
Okay.
candles and 1 up close candle. You get? The thing
Okay.
is not to know the pattern. Apart from knowing the pattern, you must know where the pattern is also forming. Are we on the same page? You must also know
Yes, sir.
where the pattern is almost forming, because somebody will say, it happened here now. This is morning star formation, but price continued going down. It needs to form at a significant level. What do I mean by a significant level? Let's say price has been going in one direction continuously, and you see it. Do you see this 3 candle formation here? This is an evening star. What is the requirement? Price has been moving continuously in one direction. And after it appeared, what happened? You had price move down here. Then you have another formation here. The same thing, but the price continued. No. So one thing you need to understand is that the candle patterns alone does not tell you that things are about to change. Are we on the same page? You need to have some
Yes.
other context, and that context is part of why you are in this class. Are we together? So it's part
Yes,
of
sir.
why you are in this training, to enable you decipher the right ones and the wrong ones. So you have what you call tweezer tops and tweezer bottoms. These tweezer tops are what you call like railway tracks. Their candle patterns referred to as railway tracks, and they are very, 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 very important. They are very, very important if you know how to use them. So these tweezer bottoms and tweezer tops, they are like, let me see now, how do I explain it? When they buy candle and they sell, yes, this is an example here. This is an example here. When they are almost the same size. Do you see it here?
Yes.
And after that, what happened? Price continued. The first one formed here, the bearish, another bearish before price came down, another bearish formed here, and price came down. So the thing is, when you see it, don't immediately jump into the trade. You should ask yourself one question. Is that pattern that is forming in line with the market conditions at that time? If you're looking at a bullish situation, that pattern that is forming, is it in line with the bullish pattern? So you'll find out that if the market is bullish, you will avoid bearish patterns and only look for bullish patterns. If the market is bearish, you will avoid bullish patterns and only look for bearish patterns. That is how you avoid falling into, they said this thing, they taught us this thing. Why is it not working again? That's not how it works. Are we all together?
Yes.
So you need to understand the context. If you're looking at a bearish pattern, the bearish pattern is the market bearish. If the market is not bearish, what the pattern is simply telling you is that the market is turning in the opposite direction, but doesn't mean that it is a long term. That means at that particular point in time, this may be happening. Are we on the same page?
Yes, sir.
Okay, so maybe, I don't know, but maybe at the end of the day, I'll see if I can find something to give to you guys to further give you an in-depth study and understanding of candles. Are we all together?
Okay.
So the next one we're going to look at is on the MT4 on PC and Android phones. So the market maker, the MetaTrader market, it's the widest selection of trading applications in the world, 1,700 trading robots and 2,100 plus technical indicators, free and commercial products. So what am I talking about? I'm talking about this. This is the MetaTrader platform. It's on this platform that you will execute all your trades. That's the Trading Pro Meta platform, because each broker has their own. So you would go to the company's website to download that of Trading Pro, and it is on this platform that you would execute all your trades from your laptop. So let me move further down. So on the MetaTrader for trading system, you have trade executions, market orders, 2 stop orders, trailing stops, and 4 pending orders. Those are what you call market type of execution. So you have interactive charts, 9 time frames, 30 technical indicators, 23 technical objects. That's what you have available on the MT4. So this is what it looks like. So this interface is what you use to execute your trade. So let's go to this place. So now when you install the MT4, you have the option of using, let me just get a plain one. Let me just get a plain MT4 chart, because when you install it, after installing it, you're going to have your charts looking like this. Your charts are going to look like this. So somebody will now say, how do I move my chart from something like this to something like this? I'm going to show you how. So once you've done that on this MT4 on the laptop, what you're going to do is you're going to right click. When you right click, you go down to properties. And you go down to properties, you're going to stay on colors. There are already inbuilt templates you can use. And I'll advise you just stick with them for the time being. So you go to this color scheme, you see this drop down icon, you tap it. You have yellow on black. If you click yellow on black, your chart will look something like this. Remember, it's going to be in bar charts. I'll show you how to change it. So if you go back to the same properties, shortcut on it is F8. So if you use F8 on your system, it will immediately take you there. So you can change it to black and white. If you change it to black and white, you have this. And I think the black and white is fair. So if you tap F8, okay, mine is not working for now. I believe it should work on your laptops. So once you've done this, you go to common. When you go to common, you see selected to bar chart. You tap it to candlesticks. Then you click OK. But on the MT4, there's an easier way to do it. At this top corner here, you move your cursor. When you move your cursor, you see candlesticks. Then you see line chart. And you also see the shortcut code beside it. That's from your keyboard, if you want to use your keyboard instead of mouse. So when you've done this, this is how your chart will now look like. So now somebody say, if you want to add your indicators, any indicators you like, you go to this place, they have indicator list. You tap on it, this will come down. If you have a custom indicator installed and you want to go straight to it, you go to custom. Then you go to custom, this will show up. Then you start looking for the custom indicator. You must have the name. Let's say I want to add RSI. So let me go down. I start scrolling down till I find RSI. Is it here? Also known as relative strength index. If I tap on it, I click, this will pop up. I click OK. The RSI has appeared here. This is the RSI. Now, let's assume I want to put moving averages on my chart. I go to the indicator list. I go to trend. When I go to trend, you see moving average. I click on the moving average. And I click on the moving average. I look at the period. What period moving average am I looking for? If it's 20, 50, 100, 200. What type? You have what you call exponential and simple. You pick the one you want. Then either you apply to close. It can be applied to the close, but it's always preferable you apply to close of the chart. Then you check the style. The style is a color, how you want the line, and the thickness. Once you've through with it, you click OK. And this is the moving average on your chart. So now somebody will say, how do I execute a trade? So to execute a trade, you have several options. You have new order. If you click on this interface is going to show up. So this top here has the symbol. It shows you the instrument you're looking at. So if I'm to, because what I have here, look at the top left corner is the USD CHF. Always make sure what you want to trade is what is appearing here. This volume is what is referred to as the lot size. The lot size is what determines what you control in the market. So let me just briefly do an explanation of what a lot size is. So lot sizes, you can see this is 0.04, 0.40. The lot sizes we have 0.01, which is what you call mini lot size, mini lot size. Then you have 0.10, which is what you call micro. Then you have 1.00. This is what you call a standard lot size. So now, the mini lot size, what it means is that for 1 pip on the mini lot size is equal to 10 cents. 10 cents. Do you understand? So that's what the mini lot size means. 1 pip is equal to 10 cents. And if 1 pip is equal to 10 cents, 10 pips will be equal to what on the mini lot size? And somebody help us out. Hmm? Hmm?
Please, can you repeat the question again?
If you're using a mini lot size, let's say, okay, now
Okay.
I'm coming. Let me put this down to mini, this lot size here now. I'm coming. I think I'm having a little bit of a challenge with my network. I'm coming. So I'm coming. Just give me a few minutes. I'm trying to find out the course. I'm having a little bit of network challenge, so it's freezing my MT4. Hello, can you all still hear me?
Yeah, we can get you.
Yes,
Yeah.
yes.
I'm coming. I'm trying to, my network is misbehaving. You don't So let's just continue while the stuff tries to set itself up. So now we understand what 1 pip is. When you're using a mini lot size, 1 pip is equal to 10 cents. When you're using a micro lot size, which is 0.01, I don't know, is it because I'm using this? Oh, I now see my problem. I was using the annotation. I was using the annotation icon. So that was what was hanging the system. So let's just start off again. So 0.01 is mini lot size. 0.01 is mini lot size. So on a 0.01 volume, 1 pip is equal to 10 cents. Are we all on the same page? Because the
Yes.
volume is very important, because a mistake here can wreck your account. So before ever you execute any trade, you must be sure that the volume is acceptable to you. Are we on the same page?
Yes.
So,
Yes, sir.
so before ever you execute any trade, make sure your volume is as it's supposed to be. Then the next one is a micro. A micro is 0.1. So what this means is that for every pip movement on a micro, it is $1. Are we on the same page? For every
Yeah.
pip movement on a micro is $1. So if we have a 50 pip movement on the micro, what does it mean? Huh?
Come again. Come again.
On the micro. Let me write it down. Maybe it's because I didn't write it down. So let me write it down. So on the micro, oh, sorry. I've done it again. Let me remove this. So pick the annotate. So on the micro, 1 pip is equal to $1. Are we together? So if 1 pip is equal to $1 on the micro, if I have a 20 pip profit on this micro, what does it mean?
That's $20.
Okay. Now, if I have a minus 20 pip on a micro account, what does it mean?
That should be a $20 loss.
Good. Now, if I have a plus 20 pip profit on a mini
Minus
account.
$20.
No. Pay attention. If I have a 20 pip profit on a mini account, how much was the dollar value?
That's $2.
Do you understand now? Now, if I have a minus 20 on this same,
Hello, sir.
yeah, excuse me, wait, on a mini account, what is the lot?
It's also a $2 loss.
Good.
Hello, sir. Hello.
Yes, Mr. Samuel. His network has knocked him off. So then the other part is a standard. Let me clean this. So on a standard account, 1 pip on a standard account, 1 pip on a standard account is equal to $10. Do you understand? So 1 pip is equal to $10. So what that means is that if you have 20 pip profit on a standard account, how much is it?
That's a $200 profit.
That's a $200, right? Now, if you have noise in the background, please mute yourself. If you have noise in the background, please mute yourself. So if we have a negative 20 pip using a standard lot size, how much is it going to be negative?
It's the same $200 source.
Now, imagine your entire account is $200 and you're entering a trade, you don't know it is 1.0 and the trade moves 20 pip against you. What do you think has happened?
That's a wreck.
That's why you now understand why I said in the beginning, you must understand your volume. It's very important. People's accounts have been blown by this mistake. And how does it happen? Now, let me explain. On the MT4, you can have, that's on the MT4 on the laptop, you can have your live account and your demo account together. Now, when you switch, you might be using a demo account of $10,000 and you put 1.0 there. Now, you might switch back to your live account, which might have $200. The lot size does not shift when you move accounts. The lot size remains the same. And if you're now in a haste to take a trade on your live account without knowing that the lot size followed you from your demo account to your live account, and the trade moves 20 pip or 10 pip against you, if your account is $200, half of your account is gone with a 10 pip move against you. Are we all together? Are we all together?
Yeah, we're still together.
So that is why one of the most important things to take note when you're trading, either on the MT4, that's on the laptop, or on the mobile, is the lot size. You must always know what your lot size is. You must always know what your lot size is. So, and then the lot sizes, you can increase them in multiples. You get. So you could do 0.01, you could do 10 of it, which is still 0.1. You could do 0.1, that's 0.1. You could do 5 of it. That would be sum total to be 0.5. So you must understand the lot size you're using multiplies your profit and your loss. So you must always understand that. So let's move on to the next aspect. Let's move on to the next aspect. So doing a training on this interface of the MT4. The MT4. So that's settled. The next aspect is the next aspect is what you call stop loss. This is another important factor. It's also as important as the lot size. The stop loss, if you enter a vehicle and the driver, as the vehicle is moving, the driver tells you there's no brake in the vehicle. If the vehicle stops, will you still continue with that driver? Huh?
No way.
I say, no way. Why won't you continue now? The driver brake, God will help you. The brake will not fail. People will get to where you're going to safely. I need answers. I need people to respond. Will you still take the risk?
No, there's no way I'm taking that kind of risk.
Why? So that same system is
You
the
are watching your
mindset.
debt with at your hand.
You say you're watching your debt. The same system you should use whenever you're taking a trade. Do not take a trade without a stop loss. If somebody ever tells you buy or sell, ask the person first, what is the stop loss? You need to ask the person, what is the stop loss? The stop loss will decide whether that trade goes. Now, let me explain. If the person tells you the stop loss is 20 pips, that's a little bit advanced, but we'll get there gradually. It comes under trade management, but I'm still talking about this. So we all know what the stop loss is. So you determine your stop loss and you put your stop loss here. The take profit is your bus stop, the exit, where you want to exit. So if you're taking a trade, sometimes those are advisable you do 1:1 or 1:2. So what does that mean? If I'm risking 20 pips, I should be able to get 20 pips for 1:1. If I'm risking 20 pips, I should be able to get 40 pips, 1:2. What is the benefit? So let me break down that benefit for you guys. Let me break that benefit for you guys. So now, why is it important? Guys, just take note too, because what I'm telling you, nobody taught me. When I first started, if I tell you nobody taught me, you think I'm lying. Where's the truth? Nobody taught me. I basically winged it. You know what they mean by winged it? I learned the hard way. So, and I don't want you guys to learn the hard way. So now, if you're doing 1:1, what it means is that you're using 20 to do 20. Do you get? Now, when you're doing 1:2, it means you're risking 20 to gain 40. And why is it why is it important that when you're taking these trades, you've gone for at least 1:2? Now, if you take 10 trades using 1:1, and you win 5, let's say you win 4 and you lose 6. Did you make money on these trades? Let's say you took 10 trades. You won 4. Let me clean it so that you guys can see it. You took 10 trades. You took 10 trades. 10 trades. Of these 10 trades, 4 were wins. 6 were lessons. There is no loss in this business. There are only lessons. It's a loss when you don't learn from it. And the market is engineered to teach you lessons. So you must always learn. Now, this person now, he has gotten only 40, Abi. Let's say he won 4 and lost 6. Let's say on each he's doing, let's say he's using 0.1 as his lot size. 4 trades is $40, Abi. Abi? Hello? Hello, are you people there?
Yeah, I'm there. Yes.
And 6 losses is how much?
$60.
Minus $60, Abi.
Yes.
Now let's go to this same guy. The same rule applies. He has 4 wins and 6 lessons. Now, his 6 lessons, he's risking 20 on each trade.
Yes.
And this is going to be 120. Sorry. This is going to be 120 because for every trade, he's risking $20. So if he loses 6, it's going to be down 120. If he wins 10, he's going to be up 80. Sorry. And nobody pointed it out to me, but let's continue. You guys pay attention so that you don't get misinformed. Pay attention. So now he's doing 1:2. If he's doing 1:2 and every trade he's risking $20 to gain $40. If he wins 4 trades, how much has he gotten?
That should be $160.
He has got $160, Abby. Now, for every trade he loses, $20. So if he loses 6 trades, how much has he lost altogether?
I think that's 120.
120. Is it profitable or not?
That's profitable.
Do you get the logic? Is the logic clear to everybody?
That's very clear.
So whenever you're executing your trades, you should make sure that at least it's going to give you 2 times what you're risking, because the lessons will come. The lessons always come. The lessons always come. So when the lessons come, the profits you've made will be able to weather it. So if you so you see in that example, he lost 6 trades, 1-4, but he was still profitable, very profitable. So the more the returns you're gunning for, the better your edge. So we've taken care of that one. Then we have what you call type. Under type, you have market execution and you have pending order. Now, under market execution is instant. That means if I've put in my stop loss, take profit, once I click sell, it goes into the market. Once I click buy, it goes straight into the market. Are we on the same page? Then the other type is what you call pending order. So when you select pending order, under pending order type, you have buy limit, sell limit, buy stop, and sell stop. Now, let's start from buy limit. What is a buy limit? A buy limit is a directive to your broker to enter you into a trade below the current market price. Now, let's say we're looking at this our chart now. You see this chart now, as this candle was coming down, and I was anticipating that the trade is going to come here and is going to go up. I will look for what this price is and place a buy limit there. So a buy limit is, when you place a buy limit, you're anticipating price to come down to that level and do what? Go in the opposite direction. That's what a buy limit is. A buy limit is a pending order. Then the other one is what you call a sell limit. So a sell limit is a direction to your broker to get you into a trade at a certain level. So as this price is coming up now, and I anticipate that if price comes up to this level here, it's going to go down. What am I going to do? I'm going to place my pending order here. That's my sell limit. So that once price hits here, price will go in the opposite direction. That is how a sell limit works. Then the other one we have is a buy stop. A buy stop is not predictive. A buy stop is like a continuation. You understand? It's used most times to continue to move in line with the trend. How do I mean? Let me explain. Why the buy limit and the sell limit are kind of like predictive. The buy stop is like, okay, price is down here, and I anticipate the market to continue. What am I going to do? I can place my buy stop here. So what does it mean is that as price continues moving up, once price crosses that level, it takes me into the trade. So you have what is referred to as a trade continuation. Are we on the same level? Then the last but not the least.
Can you come again on that part?
Now, a buy stop is more like a continuation order. Now, if price is going bullish, if price is bullish now, let's say for instance now, as price was dropping here, I anticipate that price is going to continue up. At this high, I can place a buy stop so that as the market continues going up like this, even if I'm not in front of my system, Once price gets there, it will take me into the trade and continue what? Going up. So a buy stop is placed at a certain level in line with the prevailing trend. Do you get me now? You still don't understand?
Yes, it's clear now.
Now, the reverse of the buy stop is the sell stop. So now let's assume that the market has been trending down, and I believe that the market will continue to go down and it starts moving up. I can say, okay, I can place a buy, a sell stop here. That stop means that once price comes down and goes to this level, it will take me into the trade and continue doing what? Continue going down. Are we together? So I think we're going to stop here. Our class ends by 9:30 to 10:30. So we're going to stop here. So any questions so far with what has been taught? At least now I've taught you how to execute trades on your MT4. So I will
No.
you say? Hello?
Yes, I said no question. No question. It's clear.
So you can go, you could also do some research. You could also do some research. Okay, so if you want to find out how to use the mobile MT4, you could send me the video is available. You just send me a DM and I'll make the video available to you. Are we on the same page? So even if you're using a mobile MT4 or MT5, the videos are available and will be made available to you to watch. So with this now, let's say somebody gives a trade, you now know what to do. So when you're giving a trade, first thing you do is when you go to the new order, you make sure that they are not telling you, let's say somebody says Euro USD and you go to USD CHF, you're on your own. No, don't make that mistake. Make sure that where they are telling you what they told you to do, the symbol lines up. Now, let's say they say buy USD CHF. You go to USD CHF. Make sure that your lot size is there. Make sure you know what your stop loss is. It's very important. This is the break. You cannot move anywhere without knowing that your break is in order. Your take profit is your bus stop. If you don't have a bus stop, the market will provide a bus stop for you. And most times the market bus stop is not good. Then the next thing is, are you buying or selling? So they will not tell you sell and you go and buy. The outcome will not always be nice. So always make sure you have the instrument name, the stop loss. Then you decide your risk. Maybe by tomorrow, as we move on, I'll also talk about more of these things. So, and lastly, now when you've executed the trade, let's say this trade now, let's say let's sell. Let's sell by market. Okay, I've executed the sell. I'm coming. Let me remove all these things I drew on my chart. Let me remove all these things I drew on my chart. So now let's look at this. Now we've sold here. Now the beautiful thing with the MT4 is that you can just sell. You know where your stop loss is going to be. You know where your take profit is going to be. So instead of you typing it immediately, let's say somebody says sell, I will give you stop loss and take profit. You can sell immediately. When they give you the stop loss, if you're on your system, they say 20 pips. You go to your entry, move your cursor. Do you see this drag to modify? Do you see the drag to modify showing there?
Yes.
You hold down the left side of your mouse and drag. Watch the left side. Do you see the thing is changing? Can you see the pips? Do you see the pips and the dollar value? Can you see it?
Yes.
Do you see? So if I put my stop loss here, how many pips stop loss am I having? Can somebody tell me?
177 pips.
No.
Hold on.
17.
17 pips. 17 pips.
Okay, yeah.
17 pips. 17 pips stop loss. And how much is the risk? Hmm?
20.41.
Yes, that's the risk. That's the risk that's what you'll be risking in the trade. Now, if you now want to do take profit, because we said you're risking 20 pips, Abi,
So ignore the
Yes.
if you move your cursor, it will show you what it is. Pips 17. Ignore the third one. Remember, unit, tens, hundreds, thousands. You get, ignore the third one. Now, let's say we are risking 20 pips. Let's go for 40 pips. If you want to risk 40 pips, you go the same thing. Make sure the drag to modify. Hold down the left side of your mouse. Then we start looking for 40 pips. 40 pips is going to do what? It's going to bring us somewhere here. So if we use
That's the take profit.
yes. So we look at this now. Do you see 42 pips? Give or take, fair enough. How much are we risking? How much is our take profit? Hmm?
Our take profit is
How much is the money value? If the take profit gets hit, how much will you go home with? Hmm? Hello? Are you people still there?
yeah, we are still here.
If the take profit gets hit, how much will you be going home with? It's there now. Look at it. Profit is what? The pips is what? 42. The profit is what?
Okay, you'll be going home with 48.43.
That's the profit. So are we on the same page now?
Yes.
So I think we're going to stop here.
Please, I have some question with this MT4.
Now, one other
When
thing.
I open,
Wait. I just remember something now. When you place a trade, to watch the trade and see what is going on with the trade, do you see this terminal here? You move your cursor until you find what they call terminal. When you click on the terminal, you go to trade. When you go to trade, you're going to see the position of the trade. Are you with me? So if you go to this terminal, you can either close the trade. If you click this, you close the trade instantly. Are we on the same page? If you double click on this area, this is going to pop up. And you know our volume is 1.0. Sorry. Our volume is 1.0. And you know 10 0.01 make up 1.0. Are we together?
yes, we are together.
So now there's what they call partial close. So when somebody tells you partial close, you go to the volume. Let's say you want to close half. What you will now do is you just type here 0.5. Do you see it? You are now closing half instead of closing everything. That is, if you're using anything above 0.01, you can partial close. But if you're not using anything above, if you're using 0.01, you cannot partial close. You have to close the entire trade entirely to take your profit. So, Mr. Samuel, I think you said you had a question. Hello? Somebody said he had a question. I think, is this Mr. Samuel? Hello? Hello? Okay. So, in the absence of any question, I thank you all for taking your time to attend. And don't forget to join us tomorrow at 9:30. The recordings will not be made available, so everybody is to make sure they attend the classes. So I'll try and see if I can find any material on candles to send across to you guys to help you get an in-depth understanding of the candles. Because once you have a proper understanding of the candles, a lot will become very clear to you. You better communicate with the market and your profits will increase greatly. So thank you all for taking your time to attend. Wish everybody a blessed and lovely day ahead. So bye-bye, everybody.
Thank you.